How much did you lose?
340,000.
And that's everything.
For us, a lot of money.
For anyone, that's a lot of money. Peter, what you've lost is staggering. How much money is it exactly?
1.4 million was my last balance.
Are you left with anything for retirement?
No, absolute zip.
How can my super money just go? How can it disappear?
How much did you lose?
547,000. For me, it's my whole life.
What we are seeing increasingly are bad actors that seem to have a financial motivation or interest in depriving people of those investments.
Hey everybody, welcome back to the channel. So let's talk about 4 steps to avoid failed investment schemes like a pro. Okay, you've reached out to a financial advisor or someone's cold called you claiming to be a financial advisor, and you want to make sure that whoever you're dealing with is at the very least legitimate. Okay, there's some very easy things you can do to check. First thing you do, just go to your web browser, go to Google, Edge, whatever it is, type in ASIC, banned and disqualified people, like I've done up the top here. The web engine should come up with 2 pages with ASICs, usually one at the top. The one you want is the banned and disqualified people link. Open that, it'll take you to this ASIC page. It's for the consumers, and it talks about banned and disqualified people. And that's it there, and you'll see here it's got a whole bunch of various registers from banned and disqualified, financial advisor, etc, etc, etc. So you've either reached out to someone, had a meeting, and now you want to come back and do some homework, or someone has cold called you and thinks whatever's great, and then they've sent you a bunch of emails. First thing you should do is get onto the banned and disqualified register, follow that link, go to this part here, search the banned and disqualified register. It'll open up another register. There's always a few pages with ASIC, that's why it's important. It's very simple. Drop down the menu, banned and disqualified. If you happen to know the family name and their given name, just type it in and bingo, up it'll come. As an example, I'll just put my name in there and we hit the go button. And there you go, 0 results found for Andy Semple, that's me. Easy check. So that's the first thing. You've just found out, hey, they're not, a banned or disqualified person. Whew, okay, so that's good. Second thing you want to then go and do, we'll just close these, is go to the financial advisors register. Now, just keep in mind, there's 2 types of advice that is given in Australia. It's either personal financial advice, and that means the advisor therefore will be on this register because that's the part of the law. Otherwise, the advisor could be giving what's just called general financial advice. It just means they're giving advice, but they're not taking into account all your personal circumstances. So if you do go to this register, look up somebody, but you don't find them, that doesn't necessarily mean they're not an advisor. You should then go and check their FSG because they might actually just be providing a general advice level. So if they don't turn up, it doesn't necessarily mean that's a bad thing. But if it's an advisor or a firm that is actually saying we're going to provide you with personal financial advice, then they will be recorded on the register. So again, we just click on the link. This case, it'll take us to the moneysmart.gov.au website, and you just scroll down and it's in the search function in here where it's got financial name, number or ABN. So what you would do in here is you just go and type, an advisor name. I'll just write something really silly like Billy Blogs and hit search. And there it goes. In this case, no results found for the name Billy Blogs. Okay, so if you've again been seen an advisor and they're saying they're giving you, and they can say they're claiming to provide personal finance advice and their name doesn't come up, that should be a red flag straight away, straight off the bat. If they've said to you in the meeting, oh, I'm only doing general, then don't worry, that's not a big thing. Just do another check, and the next check would be to go to their company site, their website. It could be also a social media site. This is my company, Andica. We actually hold what's called an Australian Financial Services license. My number is 297069. But what you do is you find on the particular website where they locate what's called their FSG, Financial Services Guide. This is my link down here. I'll open her up. And here it is. Now it's in a PDF. It's called an FSG, Financial Services Guide. Now I won't go into this one in particular, but the whole point is when you're dealing with a financial service provider that holds an Australian financial services license, by law they must have a financial services guide. Download the guide, read it. It'll tell you all about who the firm is, what their fees are, if you were to have a complaint, who to complain to, etc., etc. And then it also explain what their whole service is. And in that information, you can obviously find out if they actually are an AFSL holder or if they're operating under an AFSL. What actually happens is a lot of financial advisors who will have their own company, but they will operate their business under another licensee. That's fine because you're allowed to do that because it's actually a fairly capital and extensive application to become your own licensee. A lot of advisors would rather work under an existing licensee for a certain fee. So they're just as legit and they're fine, but you can just find that out. And if we go back to the registers, and then there's this particular website here, financial services and credit licenses, and then you go here, click on this, open this particular link, and this will take you into an ASIC service one. And in this case here, it's ASIC Professional Registers Search. So if we go into mine, again, Andika 297069, that's my AFSL number for my company, and I go search, there you go, look down there, there's my company, Andika, and if obviously you click on that, it'll then open up all sorts of information about Andika, you know, where their office is, how long they've had a license, all the various people that have been under the license. So it's a very easy way to actually check out who you are dealing with. So again, very, very important to go to this particular website, and then you can keep going through. There's an investor alert list. You click on that, that'll give you information. Let's have a quick look and see what's on the investor alert list. If it's on the list, don't take the risk. Okay, scroll down. Oh, then there's a search function, obviously. Look at that, 3,272 results, and then look at all this stuff that they've already had on here. And some of this stuff is updated very, very, very recently. Like that's the 5th of September 2025. In this case, it's an imposter. And then look at all these guys. They're all unlicensed or imposters. Again, the resources are here for you to check that the people either you've visited out of your own inquiry or via you doing searches, and then someone's come back to you to say, hey, you went to our website, I'm so-and-so, let's talk. Then you can vet these people before you sign the dotted line. So it's very, very important, and it's a very easy process. Again, just do your own due diligence. Seriously, it'll take you 5 minutes, but it can make sure you have a much, much greater chance of not being the next victim of the various financial scams. Now let's talk about the various scams that have happened in the last 5 years. Now I've done a search, I got Grok to go do this. Grok's an AI and it's pretty easy. Put the commands in and it gives me a list. There's basically 6 it'll give me, and there's going to be a theme in all these. And this is the 4th tip. I've already given you the first couple of tips. You know, the first real tip is to check if they're on the ban list, then check if they're on the register, then there's some, then check the FSG, and then from the FSG you can get that information like AFSL numbers and stuff to do further searches within. But the 4th one, the real one that I find that's very, very important is a thing called liquidity. Now, if you don't know what liquidity means the ability to quickly turn the asset that you've bought or assets you've bought quickly into cash. Now, there is a theme with all the recent ones that have failed, and I'll show you what that is just in a moment, but let's just quickly go through the ones that have failed. First one, of course, is First Guardian Master Fund, and that little monologue that was at the beginning of my video, supplied by 60 Minutes, that was reference to those poor people that had lost money through that particular fund. And you can see, you know, the year of its failure, it's current, there's the estimated loss. It's, you know, they're now saying it's close to $1 billion. We're talking about 6,000 investors affected. But this is the real thing I want you to start looking at, the underlying investments. And it says here, non-liquid, illiquid assets, including overstated values in property, developments, private equity, and related party loans with no verifiable returns. It's the illiquid nature is what I want you to focus on. Then we'll just scroll down. There's another one here called the Shield Master Fund and Australian Fiduciaries Limited. This one's a combined $1.2 billion. That's nuts. You know, you think about it here, 11,000 investors hurt, and they're probably hurt to the point where they've lost their dough. But again, underlying investments, non-liquid. I think you're starting to see the theme here. These investment schemes have all got one thing in common. The investments that they were going to make on behalf of you, the investor, were put into illiquid assets, meaning easy to check in, really hard to check out, or we like to call in the trade a Hotel California. Easy to check in, hard to check out. And I've been doing this job for nearly 30 years. It'll be my 30th anniversary next year. And one of the major things that was always drummed into me when I first started as a desk assistant in 1996 is make sure clients are in liquid investments. That means they can easily trade in and easily trade out. Yes, there's a prevailing price. We can't say that's the guarantee here and there, but at least you have a market. And I'll go into that just in a moment. But the theme here again, here's another one. Mayfair 101, debentures and a IPO wealth fund. Same thing, non-liquid. And that to me is really the biggest red flag of all this. If you are talking to an advisor, whether you've sought them out or they've cold called you and you've decided to, let them go, and they've come out with all these investments, find out if these investments they're proposing to you have liquidity. If they have no liquidity, do not put your money in them. That's my opinion on that. Do not even go there. If people followed that rule with these various ones we're listing here, then they wouldn't have had any losses because they wouldn't have been in them to begin with. Now, I'm not saying therefore all managed investment schemes are terrible, but for my safety and my ability to sleep well at night, I make sure when I make investments outside of the real estate of my home and property, I'm in very liquid stocks or exchange traded funds. That way, if I need to sell out, I can sell out no problem. So let's keep going and looking here. Dixon Advisory, another big one, and that was a US Masters Residential Property Fund, $500 million. Thousands of superannuation clients. Same story again. Look, non-liquid. Again, it was a managed, an unlisted investment scheme. That meant they made it virtually impossible when they hit the rocks for anyone to redeem. And if you could redeem, you were maybe even lucky to get even 5 cents, 10 cents, who knows? They did not have liquidity. And then there was that Melissa Caddick bird, the one who apparently we found her foot somewhere off DY or whatever. And in her case, she was also non-liquid, but she was worse. She was a complete Ponzi scheme, had no licenses and all that stuff. And if we then add up all these guys that have failed, we're talking in under all of these around about $2.4 to $2.5 billion loss. Now, here's what I mean by liquidity. Here is BHP. Its current price right now, it's $41.43, and we can see over here we've got a big volume of 5,400 odd, and you can see the figures. I'll just leave that on there, and hopefully, actually I'll go there. See how it says volume ahead, 5,000, and see how the figure's changing? That's just telling you constantly the volume's changing. And then that there is the current price. See, it's currently 41.42, and then over here's the seller at 41.43, and that's the volume. So that's the bid, that's the offer. It's called liquidity. It means if I own BHP, I can turn around right now, the prevailing price is basically 41.42, I can sell it for that. And for those that don't know, if you're in the stock market, we have a settlement system called T+2. Today being Monday. If you sell on a Monday, it's the trade day, then 2 business days. It means settlement will happen on Wednesday. Money's in your account, cleared funds, done. Now, obviously, liquidity is, as you can see, it's vital. It means if you ever need to trade out because your circumstances can change, you can get out. And on top of that, as well as we having listed stocks like BHP, Woolworths, the banks, I can go on and on. There's many, many stocks listed on the ASX. We also have what's on the ASX, of course, things called exchange traded funds. And these are the ability for you to invest in certain sectors, not just in Australia, but around the world. So in this example here, this is the FANG ETF, and that one allows you to have exposure essentially to the Mag 7. Now, I'm not trying to give you advice on pick this and pick that. I'm just trying to show you and illustrate that if you need in your investments that exposure, here's something that's listed on the ASX that you can trade Monday to Friday, and there's always a market there to trade. Now, again, you have to take the prevailing price. So, you can buy things sadly and they can go down. So be mindful of market risk. But we're not talking about investments where to go. I'm trying to instill some very simple tips so you are not another victim of these bloody bad people that are out there. Got to remember, there's $4 trillion in superannuation in Australia alone. There are more sharks on the land than in the water. And unfortunately, there are some bad people out there who will take advantage of it. But the best way for you to protect yourself is for you to know where to go to check to make sure the people you're about to go deal with, invest your money with, are actually legitimate people. Now, there are more steps we can do afterwards, but I think it's important just to keep it to the fore. The first thing, again, make sure you find, again, the ASIC banned and disqualified link on Google. Just do that very simple search. It'll bring up the particular page there on ASIC. There's all the registers. Click on them. Definitely check the banned and disqualified register, and then go and definitely check the financial advisors register. Very important you check them. Then go to the company you're dealing with, like I did with my own company, and download the FSG. Read it all. Don't just go, yeah, I got it, and don't read it. Read it all so you understand who you're dealing with. From that, you can do some extra searches, like on their license and other bits and pieces. But then more importantly, and this is my opinion, it's liquidity. If the investments being proposed to you do not have any form of liquidity, and the easiest way to know they're going to be liquid is they'll be listed on either the ASX or the CBO alternative index to the ASX. It means the stock market. And remember, it's not just buying shares like BHP. There's also a heap of exchange traded funds that give you coverage across all asset classes around the world. And that's often what some of these managed investment schemes will try and say. Invest in us because, hey, we get you exposure in the United States here and there. The problem is, people, they do not have liquidity. You don't have transparency. You do not have the ability to get out of them when you want. Now, if you trade on the ASX via your broker, you'll have the ability to look up on your account anytime you want. It's there. You have your own HIN number, your stocks, your ETFs. They're there. They're not going to get fleeced. So it's very, very important. I can guarantee that if had those people not put their money that we saw in the beginning of the video and those various funds that ended up losing, these guys here, the 6 here, and they instead invested in an ETF that mimicked what they proposed, or they just had a broad-based share portfolio that might have even been an ETF that just mimicked the ASX 200, etc., etc. At least they still have some money today. I can't vouch for the performance, and we're not here to talk about the performance. I'm just trying to teach people that you need to take some responsibility yourself. Yes, I know people trust advisors, but you should always take in what they say, never make the decision straight away at any meeting. Take it in, do your own due diligence. I've shown you how to do it. It's very, very easy. Okay, that's a 17-minute video. It's a lot of things to take in them, but I wanted to be very in-depth. I wanted to show everybody how easily it is, and it's just do that. It will save you the grief of what those poor people we showed at the beginning of the video have been through and will continue to go through because they've lost all their savings via super, because there unfortunately are really, really bad actors out there. Anyway, I hope you found this video helpful. If you did, write a few comments down. If you're on YouTube, like the video, it helps on the algo. I like these sort of things to get around because it's the only way we can get people to understand things. It's only through the power of proper education and knowing what we're doing, we can ensure people aren't going to get caught up by, the bad actors. Until next time, take it easy and wait until the next video. See you later.